Welcome everyone to the 10-minute offer challenge. And if you've already done some single family investing like a flip or rental and you're looking for a way to scale with apartment buildings, then you're in the right place. Because in the next couple hours, you're going to learn the 10-minute offer. And the 10-minute offer is important because it allows you to analyze deals and make offers on apartment buildings in just 10 minutes, even if you're not a numbers person. All right, now, if you're ready to scale with apartments, type yes in the chat box. I'd like to see that. I want to see if you're ready to scale with apartments. That would be a good thing to see. And get my chat open here. Yeah, we're going to get you on into circle here in just a second here. We're using a community to get into this thing. So yeah, please ask questions. I'll talk about it in a second. So type yes in chat box if you're ready to scale because my gosh, all right, all you guys, Lelaine, Sam, awesome, Tony, you guys are ready to scale. Okay, awesome. All right, now, so maybe you have single family house on the brain, maybe you do another flip or new rentals, but if you are ready to actually get into multifamily, then just type in MF for multifamily to distinguish from the yes. So you ready to do your first multifamily deal? All right, cool. Connie, yeah, awesome. Okay, that's awesome. Yeah, you guys are doing it. So if you want to do your first multifamily deal, we've now worked with a lot of different kinds of people, and we've kind of boiled it down to what we call the 4 pillars of deal maker success. And I want to kind of share this with you because, well, we're going to go deep on one of the pillars here today, but the 4 pillars is deal ready. 4 things. You got to be deal ready, which some basic education, and you got to build your team. If you do that thing, if you build your team, you get your team ready, you can overcome your lack of track record because you're leveraging your team. We're not going to talk about that today because we're going to talk about the second pillar, which is deal analysis. Deal analysis is about analyzing deals quickly and accurately so that you can speak with brokers confidently and make offers. The good news is it's easy to learn if you have the right tool, the right technique, and we're going to talk about that today. The third pillar is deal flow. You got to be with deals coming in. How do you do that? You got to talk to brokers. How do you do that? We're not going to talk about that today, but it's important. Now, the good news about we're not going to talk about today is we actually are going to do challenges around each of these pillars. So it's going to be important. The last one is deal capital. You need money for these deals. So we're going to do some challenges over the next few weeks here around these 4 pillars because we've noticed that if you pay attention to these 4 pillars, you're going to be successful and you're going to be able to do your deal in the next months. If you focus on these things, deal ready, deal analysis, deal flow, deal capital, you can do your first multifamily deal in the next 6 to 18 months, which is really cool. Today, we're gonna focus on pillar number 2, which is deal analysis. So welcome to the 10-minute offer challenge to focus on that one. And here in this challenge, you're gonna actually, by the time you're done, you're gonna make an offer on a 44-unit building, a case study, by following the 10-minute offer process, and you're going to complete a letter of intent as well. I'm even going to give you a broker script to actually deliver that offer to that broker as well. Now, throughout this thing, you're going to have access to several resources, documents, checklists, calculators, and then you're going to get access to our challenge community. We use something called Circle, and then there you can download all of these assets. You can ask questions. You can share results. You also have the chat here, of course, but the action is going to take place in Circle, and I'll walk you through that in just a second. So here's the agenda we're going to talk about. We're going to talk about why deal analysis is critical for buying apartments. That's why it's a second pillar. We're also going to talk a little bit about some mistakes people make and how to avoid them, and then we're going to get right into the 10-minute offer. And then we're going to get into the assignment where you make an offer in a 44-unit building and complete a letter of intent. I'm going to share with you the 10-minute offer technique, and then you're going to use it to actually make a 10-minute offer on this 44-unit building, which is a real deal. It's just a fictitious one here in this one. And then once we come back, we're going to review a little bit of answers to the assignment, maybe share some of your ahas, maybe some wins, some things you're stuck on. And then we're going to get into a little bit more advanced analysis for raising capital because the 10-minute offer is fantastic for making an initial conversation with a broker. I used to analyze deals ad nauseum, wasted a bunch of time. But when you're actually invited to make an offer, it gets into a little more advanced analysis. Well, I'll talk about it. I'll share with you some of the components, especially how to use analysis for raising capital and due diligence, for example. And then we're going to talk about some AI. I'm really starting to like AI. So we're going to actually do some stuff that actually accelerates the process of analysis. That's what we're going to do today. If we haven't met before, my name is Michael Blank. So in 2005, I quit my job to pursue financial freedom. I had a bunch of money from in the bank from a software IPO. I read Rich Dad Poor Dad, and I quit my job, and I pursued financial freedom full time. I did a bunch of stuff. I traded options, stocks. I started a franchise. I flipped houses, bought some single family rentals. But after years of this stuff, nothing created financial freedom that I was seeking. In fact, I lost my shirt in the restaurant business. I discovered that flipping houses wasn't actually passive income, which I guess I could have figured this out. It took me 3 years to figure it out. So in 2011, I started investing in apartment buildings, and this finally allowed me to build wealth and passive income. I lost a boatload of years, a lot of years in my journey, in my experimentation with financial freedom. And since then, I've really made it my mission to help others become financially free through apartments like I have. So today, I'm the host of the popular podcast, Financial Freedom with Real Estate, also the author by the same book. If you haven't checked it out on Amazon, check it out on Amazon, Financial Freedom with Real Estate Investing. And I own $300 million in real estate with my two partners at Nighthawk Equity. But what I'm most proud of is that we have helped hundreds of students purchase over 41,000 units valued at over $1.5 billion. And this is, you're going to get the benefit of years and years of working with people to get them over that hump and get started with multifamily. All right. So before we get started, I'm going to get you into the 10-minute offer challenge course. Okay. So two things. You already have an email. You got to check this email. The title is called "You Are Invited to Join the DMM Community." In there is a link, and you have to click that link because it invites you in there. You can't get in any other way. Now, if you've already in there, you can go to the michaelblank.com/challenge, and it'll direct you right into the community. But again, if you got to click on that link, and I know the majority of you are already in there because you guys have been busy downloading stuff and getting ahead of yourselves. Okay, so you got to get the same email that you used to register for this challenge. You got to find that email. It could be in your spam folder. And then you were looking for something from me, Michael at themichaelblank.com. You are invited to join the DMM community. Click on that and get into the community. All right, so I'm going to try to share my screen. When you get in there, okay, it's going to look like this. So it's going to be 10-minute offer challenge. There's a welcome, 10-minute offer workbook, assignment, next steps. All right, type yes if you can see that. Can you all see that? Type yes if you can see that. Okay, cool. So we need to get you into that, and specifically where I want to get you into, I want to get you into the workbook part, because what I'm going to do, I'm going to teach for about 20 minutes, and I want you to I want you to stay awake. So what we've done is I want you to go into the workbook part and fill in the blanks. So you can read them, but you don't. You can just click on complete lesson. Yay! Complete lesson. Easy win. Now in the workbook, okay, this is kind of the fill in blanks, like you kind of did in, I don't know when you did middle school, grade school, just so you're keeping, and I'll prompt you to fill it in, right? So for example, we're going to learn that the value of commercial real estate is calculated with a simple formula. Value equals NOI divided by cap rate. So you write in NO1 divided by cap rate, whatever the answer, what you think the answer is, and then you just click on next. Okay, next. Don't complete lesson. Click next, and that'll get you to the next one. So you know, get the next one here, and it'll be the 10-minute offer consists of 4 steps. Step number 1, determine the income, and you'll don't know the answer yet, okay? But you're going to learn the answer through the presentation. Just add it in there, and just stay with me in the presentation. I'll prompt it a little bit, and then so we're going to do a little teaching. We're going to teach a 10-minute offer, and then we'll get in the assignment. All right. So I'll check back in with you. We'll get back into this community when it's time to get into the assignment. All right. Type yes in the chat box if you are ready to go. You ready to go? Okay, awesome. All right, Randy's ready. Kumar and Jamie, you guys are awesome. You guys are ready to go. Demetrius, Adam. All right. Are you ready to go? Let's go. If you have questions, just ask in the chat here, and Madeline will try to help you out. All right. Let's get back into this situation here. Oh, right. So you're also going to get some bonus downloads throughout and at the end of this challenge. So you're not only going to learn a lot, you're going to really get a lot of skills. There's going to get a bonus offer analyzer, the spreadsheet we're going to use in this thing. You're going to get the broker script that we're going to use in the scrim. In fact, you're going to use it. You're going to get a letter of intent template because you're going to use it. And you're going to get an AI-powered guide to apartment riches. All kinds of prompts that will help you in your apartment investing journey. Is really cool. And then you're going to get a video deal case study where I go deep into this 44 unit that we're going to do today. You're going to look over my shoulder as I kind of go deep into the analysis. We're not going to go that deep in the analysis on that one, but it's about a 15-minute recording, and you'll get that as a bonus at the end of the session as well. So let's get started with the meat of it. Why is deal analysis critical for buying apartment buildings? Now, the first reason is obvious. It's for making offers and negotiating the deal, right? You need to answer the question, what is the most I can pay? Now, it's obvious, but there are other less obvious things of why analysis is so critical, which is why it's the 4 pillars. And that is, it's really important to build relationship with brokers faster. Now, why is that? And that is, the more responsive you are, the quicker you can build trust with brokers. And the more you can build trust with brokers, the faster you get access to off-market deals, which is where at least half the deals get done. Okay, half the deals get done with deals that the broker gives you that no one else sees, or maybe a couple other people, because he knows your criteria and you have built trust with that person. Critical. Able to get back to that broker quickly. And this is really the magic of the 10-minute offer we're going to learn today. The third reason is you need it to raise capital. How else are you going to create financial projections for your investors so that they know what their returns are? And you need that to be able to raise capital. Due diligence. So you have your analysis, you're leaning on your team, everything looks tight. Getting in due diligence, you discover things. It changes the information, changes the data and the analysis. Well, what impact does it have? Is the impact so bad that you need to get out of the deal? Or can you maybe change some things in your assumptions so you can make up for that information? So it's critical to know during due diligence. And of course, there's asset management. So when you get into this deal, right, how are you performing versus your projections? I mean, you want to know that, your team wants to know that, but also your investors. Hey, I invested in this deal 2 years ago. How's it going? You need a strong financial model and analysis to be able to answer those questions. But here's the problem, right? Now, maybe if this is you, maybe you feel stuck in this phase. Maybe you've tried to analyze a phase. Maybe you haven't. Maybe you're like, man, this is for the birds. It's so overwhelming. I don't even know where to start. But maybe you've tried to analyze deals and the whole thing seems complicated and takes too long. Like, if that's you right now, just type in your situation. Haven't started. I'm stuck. Too complicated. I'm not a numbers person, right? Things for you if you kind of feel challenged with this, right? Yeah, and so people get stuck in this stage, and honestly, and I'm a numbers person, I really am. But that was me. I mean, the biggest mistake, why my hang up, this is me being confused, is it was a major challenge for me because I spent way too much time analyzing deals. It took me 4 hours to answer the question, what's the most I can offer for this deal? And I just spent way too long. Now, if it takes me 4 hours to analyze a deal, I'm not analyzing 5 deals a week. Like, I'm lucky if I'm analyzing 1 deal a week. And so, as you know, real estate is kind of a numbers game. So I was making less offers and I wasn't getting any kind of deal. So I really felt stuck and overwhelmed by the whole thing. And I nearly gave up. So I don't know if that's you right now, but we're going to change that today because I had a light bulb moment. This is me having a light bulb moment, right on a light bulb, right? Very clever. But what I discovered using this 10-minute offer technique I'm about to share, everything changed because now I was able to analyze deals not in 4 hours, but in 10 minutes. And that allowed me to get back to the broker quickly with something like, hey, Mr. Broker, the asking price won't work for me because of XYZ reason, but this price would. Should I write up an offer or are we too far apart? That's where we're going to get to by the end of this challenge here. That's where I want to get you to that point. It was a major aha moment that took me many, many months to figure out. So because being able to analyze the deals in 10 minutes allowed me to build a relationship with brokers much quicker, I could be more responsive, and that put me at the top of their buyers list, which gives me first crack of off-market deals, and that's how deals really get done. So now I could analyze a lot more deals, which increased my chances of doing a deal faster. So today I call this technique the 10-minute offer, and it's a simple way to analyze deals and make offers on apartment buildings in just 10 minutes, even if you're not a numbers person. Now, there are some numbers involved. There's like 2 numbers involved. Okay. So before we get into 10-minute offer, you have to kind of understand how commercial real estate is valued. So this is the formula. Okay. It's a simple formula. All right. So this is the first one in your workbook. You get in your workbook, that first thing I showed you, right? So value equals what? NOI divided by cap rate. So the value is the price, fair market value, whatever you want to call it. And it's really simple. It's the net operating income divided by cap rate. Now, what is that? The NOI is pretty straightforward. The NOI is the income after all expenses, right? But before your mortgage or your debt service, right? So the debt is always, so it's income, everything you're getting in minus all your operating expenses, but before debt service, that's your net operating income. Then the cap rate, okay, the cap rate is a little more complicated. It's a short for capitalization rate. And it's kind of like a multiplier that's applied to the NOI to determine the value of the building. So you might be wondering, well, how do I know what the cap rate is? 6%, what is that thing, right? So the easiest way to get the cap rate is from the marketing package or from the broker. Now we're going to talk about that in details of how to get the cap rate. Okay. It's just a multiplier. Like if you ever looked at buying a business, for example, you get there's this multiple of EBITDA or multiple of profits. It's the same thing. It's you have this income stream, this NOI and operating income stream, and then what multiple of that is that building worth, right? And buildings in bad areas, they're worth less. Okay, the cap rates are higher if you do the math, right? And in great areas, right, the cap rate is going to be lower, and it's going to be valued more. So it's a very simple formula. Let's just do a quick example. Let's say I have a building at the net operating is $50,000. The cap rate from the marketing package of your broker is 6%. What is the building worth? Okay, $50,000 divided by 6%, worth $833,000. Now, I know there's some numbers involved, but even if you're not numbers people, you can probably do this, right? And that's it. That is it. That's the example, really, really simple example. So with that backdrop, you got value equals NOI divided by cap rate. Okay, that's all we need. We don't need to know IRR or average annual return, cash on cash. No one cares for the 10-minute offer because in your broker, oh my gosh, the broker doesn't really care about those things either. And so you don't need to care about that either. Can we have a conversation with a broker? You don't need to talk about those things. So with that backdrop, let's get into the kind of 10-minute offer. And it's got 4 simple steps. And then this is fill in the blank again in your workbook in the community. The second one after the formula is to determine the income and expenses. Okay, so that is the second question right here. So determine the income and expenses. I'm going to give you maybe one more answer, and that's it. No more answers for you. And the second step is going to be, if I get it to go here. No, it's not going. It's not going. Not moving. The second step is to determine the cap rate. So that's the second one here. So the second one here is going to be determine the cap rate. That's all you're getting. No more. All right. So the second step is determine the cap rate. And by the way, explain 10-minute offer takes a little longer than 10 minutes. Okay. But once you do it, it takes actually less than 10 minutes. The third one is to use that formula that we just talked about, determine the actual value of the property, and then simply to make an offer to communicate with a broker. Okay. So that's it. So let's get going. You guys ready to go? Type yes in the chat box if you're ready to go. Crack it open. All right. Step 1 is determine the income and expenses. So the gross potential income is the income an owner would collect, fill in the blank, if every unit were rented at market rate, plus other income, right? Gross potential income is what could this building make if I'm a rock star and I got market rents and everybody paid their rents every single month, plus other income like laundry or something like that, right? So it kind of shows what the potential is, and the actual obviously is always lower than that. But that's the gross potential income. So you want to fill in the blank. Is income an owner could collect if every unit were rented at market rate, plus any other income. Okay, so that's pretty straightforward. Now the second one is you want to determine your income expenses. You want to subtract from that, so you get your gross potential income. but it's not, you're not collecting 100% market rate. You have vacancies, concessions, loss to lease, and bad debt. So here's a quick description of all those things. So vacancy is pretty straightforward. Any uncollected rent because a unit was empty for part of the year. So someone moves out, takes them in, they're not paying. That is uncollected rent. Concessions is any type of incentives to attract new tenants. Like you move in and you'll get the first month free. Again, uncollected rent. Loss to lease is any type of discount to the market rent. So if the market rent is $1,000 and you're trying to get tenants in, you're offering it for $900 for the next month or two, but they're signing a $900 lease. That $100 is a loss to lease. And then bad debt is anyone who simply doesn't pay, right? And if they don't pay, they're eventually going to get evicted. So those are all the things that subtract from that gross potential income that we talked about earlier, right? Makes sense. So those are the four units here. So let's take an example. I got a gross potential income of $150,000. Okay, that's what I can make if I collect 100% all the time. But $10,000 now are going to be vacancies, concessions, loss of lease, and bad debt. And so the total expenses, let's say for this building, are $60,000. So knowing this information is readily available in almost every single marketing package. Every apartment buyer needs these numbers. Okay. And if the broker is good, they'll provide those numbers. Even the simple profit and loss statements will provide stuff like that. So we're going to use this information that is provided by the broker or by the seller, and we're going to go into the 10-minute offer analyzer. So 10-minute offer analyzer, you can download here, right here. Well, you'll download it later. You don't need to download it right now. Just pay attention for a second. So you don't need to download it right now. I will get it up here. Let's see. Here's my 10-minute offer. So when you download, it looks like this. It looks just like the screen I just showed you. So the 10-minute offer looks just like that. All right, cool. Now I'm going to get back into my presentation here. Looks like just like that. Now, what I want to do here, though, is I want to put these numbers in. Okay, so I'm going to, the gross potential income was $150,000. So you put that in the top. 10,000 vacancies and 60,000 expenses. So I'm just going to go into my spreadsheet and I'm going to put 150,000 and 10,000 here. And what do we say? 60,000 here. Okay. Now you're going to get this. You're going to use this for the assignment. So don't fret. Just pay attention for a second. Okay. Now there we go. Now it's in there. Now you can see here that the net operating income is now $80,000. It makes a lot of sense, right? So the total gross income, what I'm actually collecting, is $140,000. It's $150 of gross potential minus these vacancies, et cetera. So I'm collecting $140. The expenses are $60,000. So therefore, my net operating income is $80,000. Okay, so that's pretty cool. Now, let's say the seller, the broker, tells you that the cap rate for buildings in there is 6%. 6%, and then out drops 1.3 million. And 1.3 million is because of it's using in the spreadsheet this formula called price equals NOI divided by cap rate. So that's all this is doing. Inside here, the formula is it's basically dividing the NOI divided by cap rate. Very simple. It just automates the process. Okay. So pretty straightforward. And so then we basically took those simple information, plugged it in a formula. We use a spreadsheet to do it. Easier that way, And now we see that the value of the property is 1.3. Do you see that? Type yes if you see that. That pretty straightforward, right? You can do it manually. You can put it in the 10-minute analyzer, and later we'll actually do it using an AI prompt. Super cool. Okay. Now, so that's very simple. That's kind of like the income, determining income and expenses and the value, just applying what we already just learned. Cool. Now, what if the cap rate isn't in the marketing package? Because I hear somebody's, oh, Michael, what if the broker doesn't tell me anything about the cap rate, or it's not in the marketing package? Okay. Now, there's a couple things you can do. If the cap rate is not in the marketing package, you should ask the broker. See how it's underlined? Ask is the next question in the workbook. That is the answer. You should ask your broker. Now, you have a couple options here. You can ask the broker for the cap rate directly, or you can ask him for the asking price. Because you already know the NOI, right? If you know the other answer, you can calculate the other one. So, right, you need 2 of 3, and you can calculate the third. So you can ask them for the cap rate or the asking price. So let's see what this looks like. We're getting into talking to the broker. And by the way, you do this kind of stuff, you will earn trust and respect from the broker because you're asking them these things. So here's how you ask the broker for the cap rate. All right, here's what you say. Hey, I'm looking at this deal you sent me a little while ago. At what cap rate are properties like this trading? So just take a quick screenshot of that, maybe your phone or something, because this is like insider lingo. They're using cap rate, number one, and most people don't know what cap rate is. And then you're saying trading, trading, right? That's not normal. Like, you would normally say, what do they sell at, or something like that. Okay, the selling at is not bad, but when you say trading, it's since insider language, and this is why a little education goes a long way. So hey, I'm looking at this deal. What cap rate properties like trading is? Probably around 6%. Okay, cool. It's not a big deal. They just say, oh, 6%. Okay. Now, if they say, well, I don't know, or I'm not going to tell you, you can ask for the asking price. Here's how you do that. Hey, I'm looking at this deal you sent me a little while ago. I don't want to waste your time with writing up an offer if I'm going to miss the mark. Can you give them an idea around what price per unit you expect us to trade? There's that trade again, but you're using the price per unit. You're not saying, hey, how much you want, right? You're saying, hey, what price per unit do you expect us to trade? And because you don't want to waste their time, and presumably you don't want to waste their time, so they will ask you, well, it's usually going to be around, $100,000 a unit, whatever else. Now you can then, knowing the number of units, calculate the asking price. Does that make sense? Or type yes if that makes sense. That's a really easy way to get the cap rate if you don't have it, right? So if you know the cap rate, to calculate the cap rate, you have the NOI and the price, right? If they tell you what the price is, you can calculate the cap rate. Kind of simple algebra like that. Yeah, I don't have to go through that. So, all right. So now we've got the income and the expenses, and now we have the cap rate, right? And step number 3 is to determine the actual value of the property. Now we're going to get into how they're going to do this. So here's the honest truth. You might be shocked to learn this, but the asking price is typically higher than what it's worth. I know it's a shocker, but that's the case. Okay. So we can estimate the actual value by adjusting the income and expenses using rules of thumb. So here's what I'm talking about. Rules of thumb, fill in the blank. It's highlighted and underlined. So the rule of thumb for vacancy, concession, loss of lease, and bad debt is 10% of the gross potential income, or whatever is in the marketing package, whichever is higher. That's the next fill in the blank for you right there. 10%. Rule of thumb, whatever's higher, 10% or whatever is in a marketing package. That's what you want to use. Because a lot of times there's either the vacancy is missing entirely or it's 5%, 3%. Okay. It's never that low. Okay. Oh, in a normal market, it's never that low. The second rule of thumb is expenses. So we tend to throw $6,000, but the rule of thumb for expenses is 55% of the total gross income. So this 55% of whatever is being collected. Okay, it's that other line. It's the gross potential minus the vacancy. That's the total gross income, and it's 55% of that, or whatever's in the marketing package. You're going to use whichever is higher. All right. So let's look at the 10-minute offer analyzer here. On the right-hand side, by the way, all of my spreadsheets, anything in blue, you can edit. Everything in black is a formula, so you should edit with care. If you're not a spreadsheet person, don't edit things with black cells. Now, I let you edit things because sometimes you want to edit things. You just have to be very careful because you're breaking a formula. So the right-hand side, okay, the right-hand side is already done for you. As soon as you put in gross potential income, the vacancy, total expense, and the cap rate, it not only drops out the price, but it also makes the 10-minute offer column automatically. So let's see how this works. So on the marketing package column, you can see that the vacancies listed in this example is 7%. Well, that's low. So I'm going to adjust, or the spreadsheet is going to adjust that to the rule of thumb, which is 10%. So what I'm calling BS on the broker, saying, hey, you're reporting 10 grand of vacancy, et cetera, in your marketing package, but actually it's 10%. So $15,000. Now that reduces your total gross income. And then look at your expenses, right? The total expenses is $60,000. And that's only 43% of the total gross income. The rule of thumb is 55%. So the 10-minute offer adjusts the expense to 55%. So instead of being 60,000, we're saying, you know what? By the time I get in there, dig around, due diligence, it's probably going to be more like 74,000. This is really strong rules of thumb. I mean, hundreds of deals are really, really close to these rules of thumb. And then the cap rate, let's say you just leave it as is. So for example, in this particular deal, They're giving you all these financials. They're asking 1.33. You do the 10-minute on an offer, and it comes out more like 1 million, which is like par for the course. Okay, so the 10-minute offer really adjusts the financials that were provided to you and gives you a more realistic offer. Now, so now knowing this, now what do you do with it? And that's step 4, which is now you're going to make an offer using the 10-minute offer broker script. I'm going to share with you what it is. You're not only going to download it, but you're actually going to modify it yourself. And I'm going to call in maybe 1 or 2 of you, and we're going to do a little role play, and you're going to deliver that script to me. Okay, so here's how it goes. It's super casual, using what we just did. So you can make an informal offer by using 10-minute offer broker script. Okay, underlined. That's fill in the blank. Cue for you. All right, so here it goes. Hey, let's say the broker's name is Rob. Hey, Rob, I looked over the package you sent me. Everything looks good. It's what we talked about on the phone. I've made a few adjustments to the underwriting and the package show. For starters, the vacancy, concessions, loss of lease, and bad debt in the package was only 7% of gross position income, which appears low to me. My property manager is telling me that it's typically more like 10% for properties like this in this area. Right? So what property manager, Michael, are you talking about? Well, when we talk about getting deal ready and building your team as a separate challenge, you're going to actually attract a property manager. You're going to have a property manager on your team, and they're going to tell you this. So you don't have to make stuff up and lie. It's literally going to come from the property manager, and you can say it with conviction. Okay, so that's the first thing you said. Hey, your income is a little wonky. It's probably a little inflated. You know, your vacancy only 7%. Okay, fair enough. You keep going, but let's talk about the expenses. Now, I didn't spend a lot of time drilling down on the total expenses, but they only add up to like 40% of the total gross income. Now, I'm seeing more like 55% in this area. Again, positions you as an expert. Even if you're not, your property manager is. And I'm telling you, it's more like 55%. So you can lean on me and saying, hey, you know, this is 55%. Now, it goes on. You're advertising a 6% cap rate for this deal. I'm not 100% sure that's accurate for this area, but let's assume it is. If you apply a 6% cap rate to the adjusted net operating income, the valuation of the building is $1 million, quite a bit away from the 1.3 asking price. Okay. It goes on. If you see something off of my underwriting, let me know. I could make you an offer at asking price, but I don't waste your time. We both know the actual NOI will be lower than what you have in the financials once we get into due diligence. So I'd rather be a bit more realistic upfront. Now, I'm not sure how set your seller is on the asking price, but I'd be pleased to make an offer at $1 million if he would consider it. Let me know what you think. I look forward to hearing from you. Now, this can be delivered in email, voicemail, or live. And that is the 10-minute offer broker script. And the cool thing about it, you just made an offer. You just made an offer, my gosh. And more importantly, it's not just you made an offer. That's important. But you didn't spend more than 10 minutes analyzing the deal, come up with an offer price. Now, we did because I explained to you, but once you do it, it won't even take 10 minutes. And you use the information that you were given by the broker in the marketing package. You didn't spend hours researching online, making a bunch of phone calls to people. Okay. This is awesome. And more importantly, not only did you did not waste your time, but you got back to the broker quickly with feedback. When I ask brokers about this, they tell me that 25% of their buyers get back to them with feedback of any kind. So if you're one of the few that gets back to them within 24 business hours, you're automatically in the top 20, 15, 10% of that brokerage list of buyers. And that is the fast track to off-market deals. And by making this informal 10-minute offer, you actually start the negotiation process. Now, the broker may not respond. They may fall off their chair laughing at you. Okay, but he may counter, or you may say that that there are multiple offers at a higher price. Either way, you're in the game now. You've started the negotiation process. So you're not working harder, you're working smarter. This is what took me months to figure this thing out. And by doing so, you're going to be able to look at a lot more deals and increase your chances of finding a deal that will actually work. And then you'll be able to respond to brokers faster, and that builds trust and gets you faster access to off-market deals. Does that make sense? Right? Does this 10-minute offer kind of make sense? So I'm just going to kind of check in with you a little bit here. And how how did you guys do with the workbook questions? Let's type out in chat a little bit right now. How'd you guys do with the workbook? Did you guys keep up? Did it kind of make sense to you? Were you confused? Aaron says 100% on target. Good. Now, if you're struggling with getting on, okay, I know it could be a little complicated. I'm sure Madeline is excellent. Thank you. Thank you for the feedback. Good instructions. Thank you for that. Madeline, I'm sure is helping you kind of get on here and download these things. If for some reason it's not working, don't get frustrated because you're going to get the recording to this and you can do this on your own time. Download at your leisure. It's important to me that you go through this process because it's simple, but it's powerful. And that's what I want to get across to you right now is that getting in apartment buildings sounds complicated, but if you break it down, it doesn't have to be. You need a little guidance. Okay. And this is what I did not have when I got an apartment. I didn't have any guidance. So I'm just figuring stuff out on my own. And that was a major mistake. And I'm just giving you examples of how with a little bit of guidance, you can shave off a lot of time, a lot of years and lost money. I think the recording will probably be available tomorrow, Madeline. I'm pretty sure she'll respond to you. She'll probably help people get on. So you get a recording and you can work on this in your own time. But now I kind of want to check in with you. And it's kind of now timed. You're going to be your turn to get started with this stuff. It's now time to get into the assignment. All right, cool. So what you're going to do is you are going to apply the 10-minute offer to a 44 unit building. And I'm going to give you the marketing package. You don't have to go anywhere. Okay. And then you're going to do the 10-minute offer on that building. And you are going to apply what I just shared with you. And so you're going to go over here and you're going to click on a site. What you're going to do is there's 3 steps. You're going to download the challenge documents. You're going to follow the instructions below, and then you're going to upload your answers to the chat on the right. So let me show you what that is. You're going to get about 15 minutes to do this thing. You're going to click on, there's instructions here on how to get the file. So there's this icon right here, upper right-hand corner. You're going to click on that. And you're just going to download every one of these documents. Okay. Just download them all. Do that right now. Download them on your laptop. I think Madeline also emailed them to you. And Madeline, if you did not do, maybe you can fire them right now. So for some reason, someone is having some trouble getting access, they can at least get the files.
They were sent to register in emails, but I can drop the link in the chat, the Zoom chat as well, if that's helpful.
Yeah, let's do that. Let's do that. Let's get everybody access to this stuff. Yeah, that's a great idea. So Madeline's going to drop this in the Zoom chat. If for some reason you're having trouble getting into the community here. So let me go each over these assets here real quick here. The 10-minute offer ebook basically is well, a transcript of what I just talked about, right? It goes through. So if you want to reference later on, just go through. It's a reference guide for you. The 10-minute offer analyzer is the spreadsheet that we've been using, and you're going to use, it's the spreadsheet here. All right. So that's going to be the 10-minute offer analyzer on the right here inside. The next one is going to be the 44 unit multifamily marketing package, OM offering memorandum. I'll show you that in just a second, because the last 3 you're going to need for the actual challenge. So that one, you're going to get a letter of intent template, and you're going to have the 10-minute offer broker script. So let's start with the marketing package. So the marketing package, when you open it, is going to look like this. Okay, this is a righteous marketing package. Okay, this is a pretty long one. It was this is a deal we looked at a while back in Washington D.C., and it's got a lot of cool pictures, financials about the area. You can ignore all of it. You can look at it if you've never seen them before. You can read it later. It's kind of neat and cool. But really, what we want to do, if I remind you, is we want to get in here and we want to make sure these are all zeroed out. So when you download it, you just should all be 0. Okay. And what you want to do, what I want you to do is I want you to go through this marketing package and find the gross potential income, the vacancy concession loss to lease. Okay. It'll calculate the total gross income, and then find the total expenses. It'll calculate the net operating income, and then I'm not going to give you the market cap rate. I'm not, but I am going to give you the asking price. Okay, so the asking price, make sure I got, what's the asking price for the, is it 2.7 even, Madeline? I think it's 2.7. So you're going to use in here, okay, it's going to be 2.7 million is going to be the asking price, because now you're going to have to calculate the cap rate. I'm going to make you do some advanced math. So the asking price is 2.7. Oh, it's close. You'll see when you do the math, it's darn close, but it's 7 million is the asking price. Now it's also embedded in here. So I want you to use the current financials. So there's a bunch of stuff, blah, 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 blah. I want you to find the current financials. Scan this thing. Okay, find the current financials. That's where you want to be in, is the current financials. That's what you want in here. The asking price is 2.7 million. Okay, you're going to need that to calculate the cap rate. All right, so you're going to go and fill out the 10-minute analyzer. That's number one. Okay, and then you're going to get you're going to actually, let's do the 10-minute broker script first. 10-minute download and the rest, and it looks like this. Okay, and I conveniently highlighted all the things that I want you to fill in. Everything that's highlighted, hey, put in your broker's first name, make something up, and then replace everything in here, and you're going to get that from 10-minute offer analyzer. Okay, same stuff. You're going to put this in here, and that's your broker script. And then you're going to do the same thing for the letter of intent template. Okay, letter of intent is a more formal offer than the broker script. It's usually really kind of formalizes the thing, and just go through and apply the same thing to this letter of intent purchase property. All right. Now, all these instructions are down here. Okay, all these instructions are down here. So, well, except for this thing here. So I want you to go 10-minute offer, and then basically answer these questions. All right, answer these questions in the chat. So on the right-hand side, up here, okay, pay attention. Look at me. Look at me. Upper right-hand corner, there's a chat bubble. If you put this chat bubble, you can see a chat pop up. So I want you to basically copy and paste this in here, okay, like that, and give me the answers. Post that, do that first. Then you're going to use it. You're going to fill out the 10-minute offer analyzer, and you're going to put in what is your offer price. What is that price? So this is kind of what you're picking out of the marketing package. What did you get in your 10-minute offer price? That's the thing down here on the right-hand side. 10-minute offer. What is your adjusted? And that's your 10-minute offer price here. Post it in the comments. And then when you're done with a 10-minute offer broker script, upload it. You can upload it in the chat as well. Paul is already, and Adam are already on top of it. Okay. You're going to upload the actual files. You're going to upload your broker scripts, and you're going to upload your LOI template on the right-hand side. If you have a question, it might be easier to maybe you do a chat, and Madeline's going to there. But now at the time is you're going to get 15 minutes. It is 7:45 Eastern. You're going to get 15 minutes. And we'll reconvene at the top of the hour. And if you have any questions, go ahead and you can raise your hand, and Madeline can maybe call on you and answer any questions you may have, or do it in chat, whichever is easier. So again, you're going to get the recording, and you get to work on this in your own time. And then we'll review the answers. So if you're willing to share your answers later on and live and share your broker script, that would be great. All right. We'll do a little background techno music. And then when we get back from the break, we'll review the answers, and then we'll get into some advanced analysis, and then we'll look at some AI stuff, and then we'll close.
drink, she said, I think I'm losing my head now. I think I'm losing my head now. My head now, losing my head now. My head now, I think I'm losing my head now. My head now, again and again. One more drink, he said, I think I'm losing my head now. Tonight we'll make bad memories. One drink, he said, and baby, you got me tripping. We're face to face. You about to do it again, 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 again. We about to do it again, again, again and again. One more drink, she said, I think that bad memories. Do you dream alone under the moon? Is it brighter, brighter when with you? Is it afterglow? Is something else? Tell me this fire back in the eyes. It's still are you wide awake? Counting the stars, or just lying in the dark? Ooh, it's still, it's all, it's still. Though we're far apart, I can just feel it. I wanna be where you are. I wanna be where you are. I wanna be where you are.
game. They got me anytime, anywhere. My mind in the air. Surround me. They surround me. Surround me. Anytime, anywhere. My mind in the air. They're waiting for me. They're calling on me.
Lay low, hit the sun, everybody have a real good time. Real good time.
Surround me.
Yeah, we cool, yeah, we drunk, lost my mind, and baby, I feel high. I feel high.
They're calling on me.
Lay low, hit the sun, everybody have a real good time. Real good time.
Surround me.
Yeah, we cool, yeah, we drunk, lost my mind, and baby, I feel high. I feel high.
They're calling on me. I'm hearing voices in my head. There's no way to escape. They got me anytime, anywhere. My mind in the air. Surround me.
Lay low, hit the sun, everybody have a real good time. Real good time. Yeah, we cool, yeah, we drunk, lost my mind, and baby, I feel high. I feel high.
They surround me. Surround me. Anytime, anywhere. My mind in the air. They're waiting for me. They're calling on me.
Lay low, hit the sun, everybody have a real good time. Real good time.
Surround me.
Yeah, we cool, yeah, we drunk, lost my mind, and baby, I feel high. I feel high.
They're calling on me.
Lay low, hit the sun, everybody have a real good time. Real good time.
Surround me.
Yeah, we cool, yeah, we drunk, lost my mind, and baby, I feel high. I feel high.
They're calling on me.
Hey, Michael, you're sharing screen.
All right. Now we're cooking. All right, but another 4 or 5 minutes. Get the assignment done. Madeline, what is the right answer, by the way? The 10-minute offer. Type it in WhatsApp for me. I think I had the right answer, but okay. All right. Let's see. Let's do a little review. Let me share my screen again here. All right, let's do a little review here. Thank you for submitting your answers. Check in on you real quick here. Adam Paul, nice. Anthony, Scott, uploading your broker script. That's cool. Cesar, Lelaine. Oh, look at your broker scripts. That's cool, Adam. Nice. Letter of intent. Awesome. All right, so there's a few different answers here. So let me let's review this and let's see how I do, right? Because I could be wrong. So let me bring up my 10-minute analyzer and then the PDF package here. So the PDF package, I'm looking at current financials, is going to be down here. So right here, it's a little bigger. So gross potential rent, other income, expenses, everything should be right here. Page, okay. So if I bring up my trusted 10-minute analyzer, I got gross potential is 492, 640, well, not 648. Oh, that's right. 492, 248 plus 2,400. Okay, so gross potential income is 492, 648. So that's right here. Then the total vacancies, et cetera, are 132, 367. All right. And total expenses are 167,033. All right. And then the cap rate, you got to calculate the cap rate. Okay. So you got to do your math on that one is 7.1, right? So you kind of know what the NOI is. You got to go back to our trusted cap rate is going to be NOI divided by value, right? So you got to go in there. So any cap rate is equals to NOI divided by value, right? So you got to take the 2.7 asking price, and you're basically dividing 167. You're dividing the NOI, sorry, the NOI 2.7. So you get a cap rate of about 7.1, close enough. 7.1. You plug this thing and you'll get really close to 2.7. So you can kind of guesstimate it, or you can actually use a formula. So because the asking was 2.7, which is buried in here, I gave you the information, but it is buried in here, right here. Asking price is 2.7, but I gave it to you anyway. So we are here. So if that's the case, then let's take a look at our analyzer again. This is the information from the marketing package. And so applying a rule of thumb here, you can see that the rule of thumb is 10% or whatever is higher. And this was actually higher. So we're going to keep the same one. So this apparently is a distribution, and they disclose it in the marketing package. So we're going to use what was given there because it's higher than 10%. Now the expenses though are 46%, and that is lower than a rule of thumb. So we're going to increase this to that. And we're going to keep the same cap rate as here. So you can see here that the adjusted price is 2.28. Right? 2.28. And let's see who got this. 2.28. Oh, close. 2.23. That is very close, Adam. I will take that, because the cap rate, if you calculate the cap rate exactly 2.7, it's going to be a little different, like 7.15 or something. So that is really, really close. We'll use 2.2. 2.2 is close enough for government work. Okay. Asking cap is 7.1. That's good, Adam. Yeah. All right. You got the hang of this thing. Paul got it right. 2.2. Nice. Asking price is 2.7. Correct. All right. You got the information. Just looks pretty good, Nahili. So let's see if down here you got the answer correctly. Tiffany. Yep. You're extracting information correctly as far as I can see. Good job. So this, assuming the ask is 2.7, says our 6% cap rate seems to be wrong. That's what the analyzer is by default. So by default, it said 6% on here. Gosh, I can just get the right browser here. There we go. This was 6%, but if it were 6%, you can see here that the asking price would not be 2.7, it would be 3.2. There was a little bit of a trick question there. So you had to come up with a cap rate for that. Back to my screen here. All right. So, cool. Oops. 2.5. You got the right, Tiffany, but something is not right with the offer here. So it's not quite 2.5. I have to take a look at this and see where that is. All right. Well, a lot of you got it right, and some of you got it a little wrong, or got close. 2.5. The point is, I don't know where you got it wrong exactly. Let's see. Let's see. I need to get that right. 132 total expense 167. Cap rate. So what's the cap rate here? DA, right? That's very important. So 10-minute offer. All right. So some of you got it right. And some of you were off a little bit. I don't know exactly, Travis, how you're coming up with it. But this is the right version here. I think we got that right. Matt, let me know if I got something wrong here. I'm off base with 2.28. I think that's correct. All right, so let's do this. Let's who wants to present their broker script? Just raise your hand, and let's just do a little role play here. Madeline, you can call on somebody. And who would like to read their broker script here? Share their broker script. And let's not look at the numbers right now. Okay, I don't really care about the numbers so much. I care more about, hey, let's have a conversation here. Adam feels very confident.
That's perfect. I was just about to ask him. I'm just about to call him.
You know, Adam, just because you're a numbers guy doesn't mean you're going to be good on the fucking brokers.
It's true.
But you know, I'm going to ask you, so are you more of a numbers person or more of like a relationship person?
I'm like started as a numbers person, but now I'm a relationship person who doesn't mind doing numbers. So,
yeah, that's funny. That's funny. I found a lot of people who are numbers people don't really like talking to brokers, but they overcome it because the subject matter is numbers, and you get in this analysis for a little bit, and you get very comfortable with analysis. In fact, very quickly they can be better at underwriting deals than their brokers. In fact, it's very not uncommon with a 10-minute offer. You can actually uncover math errors in someone's marketing package. Hey man, look at this, look at that. This cap rate, it does not up to your asking price. All right, go ahead, Adam.
Okay, sweet. Hey, Michael, I looked over the package you sent me. Everything
Yeah.
looks pretty good. It's what we talked about on the phone. I made a few adjustments to the underwriting. For starters, looking at the vacancy concessions, loss of lease, and bad debt, it's only 7% of the gross potential income, which seems a little low to me. I know my property manager is telling me for properties like that in the area, it's about 10%. And I didn't spend a lot of time drilling down into the total expenses, but I see they only added up to 46%, and I'm seeing more like 55% in the area. I also see you're advertising a 7.2 cap rate, and I'm not exactly sure that that's accurate for this area. But even assuming that it is, if you apply that cap rate to the adjusted net operating income, the valuation of the building is quite a bit away from the $2.7 million asking price. If you see something off in my underwriting, let me know. I'm happy to make an offer at $2.2 million, given the adjustments that I just mentioned in my underwriting. But I don't want to waste your time if we both know that the actual NOI will be lower than what you have in the financials once you go through diligence. So I'd like to just save both our times and be upfront about it. I'm not sure, how your seller is on asking price, but again, I'd be willing to write an offer for $2.2 million if you consider it. So let me know, and happy to send over a letter of intent.
Yeah, that's great, Adam. It is a bit away from asking. There could be some flexibility in the seller, but let's do what you suggested and let's submit the LOI and see where it goes.
Okay, sounds good.
Yep.
I'll
That's good.
send it right over.
Awesome. That's great. Yeah, good job, Adam. So give me some feedback on this experience for you. This was easy. It was hard. You got it right. You're really kind of stuck. Give me some feedback, positive, negative, about what you when you went through. So just raise your hand and let Madeline call on you. Love to get your feedback, positive, negative, challenge, win, whatever that was for you.
Do I need to just pick someone?
Yes, pick someone. That's what I'm waiting on. That's what I'm waiting on.
Okay. Aaron,
Lorraine.
would you like to share some feedback?
We got at least 3 with their hands up.
Got hands up. Let's see. There we go.
All right,
Hi,
Lillian.
Michael.
Hey, Lillian, how's it going?
Good. Thank you so much for this. It has been really helpful. I just got really confused with the financials because on page 7 with the expenses, you did use 167,033, but on page 8, there were other financials on there, so I used that expenses instead, the 199. So I just wasn't sure if they're showing 2 different numbers. Go scroll down a little bit more.
Yeah, I see it. It's 199 right here.
Yeah. So I wasn't sure really which
okay.
one to use.
Well, see, this is perfect. You're actually showing an inconsistency in their underwriting. I didn't catch it. I was like, oh, I found it. So I see what you mean. You're using the 199 right here.
And that brought up to, I think, about 50-something% expenses instead.
All right. So if you put in 199, let's say 199,650, 199,650. Ah, my goodness. They're right in line, these sons of guns. Okay, interesting. Yeah. Yeah, and that would have adjusted the cap rate too, right? Because they're asking 2.7.
And that with that cap rate, I think it was like 5.9. Or
yeah. Okay, well, that's good. Well, let's go with it then. Okay, it's 5.9. It's cool, right? So that's also right. So let's say that was the right numbers. Then you look at this thing, and then you can see here how the 10-minute offer adjusted the it didn't adjust either of them because they're actually equal to or greater. So in this particular case, you're like, man, they're asking, and it's actually really what it's worth. Doesn't happen, which is why I know those numbers are wrong. But that's a good catch, Lelena. So you were not wrong. You would have called the broker and going, hey, Nan, which one is it?
Okay.
And the broker would have been like, my gosh, Lelaine, like, amazing. She called me back, and there's something wrong with the underwriting. Like, this is a good thing. That's
Okay.
great. Great pickup. I'd like to say I put that in there on purpose, but I didn't. So good catch.
All right. Thank you so
All
much,
right.
Mike. I
Yes,
appreciate
Lang. Awesome. Kevin, you got your hand down? Someone had their hand up. Who's next? Madeline? Kevin's got his hand up, and Sheena has her hand
Sheena.
up.
I have Sheena. Who's next?
Kevin, keep your hand up until you're
Yes.
called on. Otherwise,
Because otherwise I won't see
Right.
it.
Let
Hi,
me know
Sheena,
if you
what's
can
up?
hear me. I'm doing
Yes.
just fine, thank you.
Yeah.
Just two quick questions for the rent as well as the expenses. I did see that second expense. I was assuming that was the performer rents as well as expenses. So which one should we use? Should we use the performer numbers or should we use the current numbers?
Well, you use whatever you're given. So obviously, current is better than pro forma. The script that Adam read, if you only have pro forma, it'll like, hey, I only got the pro forma, which we know isn't true, but I'm going to give you my analysis anyway on the pro forma numbers. But I really need the current numbers, or at least the rough numbers, so I can make a better rough offer. Otherwise, we're wasting our time if I'm making an offer on pro forma, which that once I get in due diligence, it's not going to happen. So you got to use what's there. And the beauty of the 10-minute offer is you can push back on the broker, say, hey, give me current so I can make an offer. But I would go through it first, and then get the more accurate numbers from the broker. All right. Well,
We got Kevin.
all right, Kevin, get your hand up patiently.
Hey, Michael.
Hey.
Hey, this is such a cool project you're doing here, making us do this, this 10-minute offer. So I took it really seriously. Like, how quickly could I analyze this thing? And first I went like market and MSA, and I had thumbs up on, that building and that MSA. And I was like, okay, so let's go into this with, where the rents are and what the current NOI is. And pro forma NOI was up near 300,000, but I just took the current NOI of like under 200,000, and I said, okay, at 200,000, if I want to pay an 8 cap, because nobody knows if interest rates are going down. Yeah, the Fed might cut in September, but a lot of things could happen. So what should I pay for this asset? I set an 8 cap, and that gave me a 2.5 million offer, which, just trying to do a 10-minute offer, like if I could, get some interest based on that, and obviously I have to inspect, the units and see all the underbelly of the underwriting, but just back of the napkin, that's the way I did it.
Yeah, I think that's fine. The big thing here is that you use the information that was provided to you by the broker. You're using the information essentially against them. Now, if they, like I did with Adam, invite you to make an offer with an LOI, you got to go to phase 2 analysis. Now, we're not going to cover phase 2 right now, but I'll give you a glimpse in what that happens. It's also not very complicated, but that may require some time. The problem that I was making early on that most people do is they get so into the weeds before they even call the broker. And then they get done with it, and they're asking 2.7, you're offering 2.2. And the broker's like, I said, just get out of here. And you just wasted 4 hours digging around online, talking to people, and you weren't even close. And so this really kind of gets you in the ballpark. And when they go, yeah, ballpark, then you got to spend some time on the analysis. And we'll do that. We'll do that here in a minute. Maybe one person. Thank you, Kevin, for that. Maybe one more person with some feedback or questions?
I have Michael Williams next.
Michael Williams.
Hey, and other Michael, this is a great exercise. But I can't figure out how you calculate the cap rate.
Okay, so what did I say? Cap rate is equal to NOI divided by value. Get that right?
Yeah, and what is the value? Which is the value?
So the value is 2.7, right? Value is 2.7. That was the asking price. That's what I told you.
Got
Right.
it. Okay.
And then the NOI up there is whatever is up here. So that's going to be that. Why? Which expense did you use? Did you use the 199 or the other one?
199.
Okay, good. Man. All right. So so if we do that, then the cap rate is going to be this divided by that, and that's better be a percent. That's 5.95. All right, so you're rounded wrong. It's 6%. And I did see that in the stream, 6%. I'm like, oh, you're wrong. But using those financials, you were right, right? So in this particular case, you with those financials, you're, you know, and you see that you plug in 5.95 precisely, and it's darn close to 2.7. You see how that works?
Got it. Okay, thank you.
Yep. Okay, that's good. Well, let's do Anthony real quick. He's been very patient. Just dying to get us
Well,
something
thank you.
else.
Yeah, thank you. Yeah, do I have audio? All right. So I put it in the chat as well, but Michael, this model of your teaching here is way ahead of everybody else right now. This has been the most efficient, most productive, I'll call it a webinar I've attended. So you're onto something here, and I really appreciate your time and Madeline's time putting this together and helping us all through this. So that's all.
Cool.
Thank you.
Well, thank you, Anthony. All right, let's move on here. We did this. That's cool. Did that. All right. Let's do a couple of fun things. We'll do some little advanced analysis, and we'll do some AI, and then I'll close this out here. So what do I want? All right. So advanced analysis. Remember, I told you earlier that analysis is very important, obviously, for making offers, to build relationships with brokers, but also things like raising capital and due diligence, and asset management. So let me kind of give you a glimpse of what that looks like using an analysis tool called a syndicated deal analyzer. If you've ever heard or used the SDA, just type SDA in the chat. It's basically the most widely used analysis tool for syndications on the planet. And well, I happen to create it, but other people in other programs use it all the time. Bigger Pockets uses it. The beauty of it is it's actually very simple. It's simple to do for simple things, and then relatively simple to do very advanced things. So I'm just going to show you, just give you a very quick tour. You guys can, I'll give you a 50% discount code if you want to mess around with it later on in your own time. And then as a bonus, you also get my video analysis where I go over this 44 units using the SDA. So if you want to see the full analysis, you can do that later on. I don't want to confuse you. It's not actually that complicated, but I do want to give you a glimpse into what that looks like. So if I can bring up the correct SDA for this deal, start. Okay, so you have this idea of these different side-by-side scenarios, kind of like the 10-minute offer. You can see here in column number 1, you have the marketing package, and then you have column number 2, which is my version. That's exactly what the 10-minute offer is. In fact, in the SDA, it actually says 10-minute offer up here. So you can see here in the marketing package, I filled in the asking price, 2.7, 44 units. And then you can see here the numbers are exactly what we just went through. Okay, you got the income, effective gross income. Then you got your expenses here. And then my cap rate is 7.1, asking price is 2.7. Okay, so that's column 1, that's the marketing package. And then the second one, I make my adjustments here. I use 27%, same thing. And then down here, I'm going to adjust it to 55% right here. See how it's 46%, right? Which matches what we had here with the previous one. Before it was, I hit Control Z a million times. I can probably get back to it. So using the other numbers, you can see here that's 46%. And I'm going to turn it to 55%. So I just created the 10-minute offer inside the SDA. Same thing. I didn't want to give you this tab because there's so many numbers and you'll probably glaze over and go, oh my gosh, it's so complicated. Okay, so it's not really that complicated. But here's what I'm going to do. I'm going to show you what this looks like carrying this forward. So you have the second one figured out. Okay, you have the second one figured out. I'm going to go in the summary tab. I'm going to make it use column number 2, which is this one here. You see this my version. And what it does, it takes this column and it populates the entire model. And it's a very complicated model, but you don't have to do anything. Okay. It shows you very quickly what the investor returns are. So you can see here that the cash on cash return is 3%. Well, that's not very interesting. An 80-20 split is a negative average annual return. Well, that's bad, right? So looking at this right now, the 10-minute offer ain't really that good. It's not really that good. And now you can use the SCA for this, and you can actually apply this 10-minute offer and come up with something a little better. But there's a lot of assumptions in here that may now no longer be true around the cap rate or interest rates or anything like that. But let's say, okay, I'm invited to make an offer, an LOI offer. Okay, now you can sharpen your pencil a little bit more, and I'm going to go into my fourth column over here. I'm going to work out of this column, so I'm just going to turn this over into the fourth column, and the numbers are exactly the same. But now let's tinker with this a little bit, right? So let's tinker with some of these assumptions. Let's say now you're always supposed to make offers on actuals, okay, actual numbers. But let's say I'm willing to compromise on this, and I'm going to turn this to 20%. Okay, I'm going to turn this to 20%. I'm going to give the seller a little bit of benefit. Okay, just so I can make a little bit of higher offer. So if I just turn this to 20% and I go back over here, you can see things are starting to turn a little greener. You know, now it's a 4.6% cash on, still not very interesting. Okay, let's say then I start dropping the price. So I'm going to, the asking is 2.7. I'm going to go down to 2.5. Okay, now let's see what happens. 2.5, I'm getting an average annual return of 5%. Okay, which is still not, but the 6% cash on cash is getting better. But let's say I really want an IRR of like 14%. What do I need to do to get down to that? So let's set this to 2.3. And I'm getting there. Now it's 11%. So let's go to 2. Okay. Now it's 13%. Maybe just a little lower, maybe 2.15. Let's do 2.1. 2.1. Okay, now we're a bit over, right? So it's somewhere around 2.2. Somewhere in 2.2. Okay, let's look at some of these other assumptions. So let's say I'm going to give them 20% vacancy. I'll give them a little bit something. I'm feeling pretty good about that. Is there anything else I can do? Make these returns a little better. So there's a variety of things that you can do now. You can tinker with, for example, the acquisition fee. Well, man, I don't want to offer less than 2.2, so I'll pay myself less. I'll give myself a 2.2 acquisition fee. Now we're at 14%. Okay, so what this model does is it very quickly gives you the returns for your investors, and the investor returns is everything. You can go in the P&L now, and this is pre-populated right here. It gives you a 10-year P&L. I haven't even itemized anything yet. You can do that as well. You can itemize everything, but it also breaks down your closing costs here. You can tinker with the closing costs, and then you can tinker with the exit strategies, what your assumptions are when you sell this thing. You can build in a refinance, and then you can look at the returns. You can actually look at the investor returns. You can not only look at your investor returns here, okay, but you can also look at your returns. You can look at your acquisition fee, your distributions, net proceeds from sale. You can actually look at things. So with a few simple numbers, I now have very powerful projections I can use for actually negotiating the deal. I can use it for raising capital. I can use it now for doing the due diligence and all those things. And so this is kind of a little bit of a glimpse that I want to show you behind more sophisticated analysis using the SCA tool. It's a very complicated tool, but it's very easy to use. So this is something that you would use if you're invited to do an LOI, and you would also bring your team to bear. We talked about your property manager, right? And your lender. Well, what are the interest rates, right? What are you seeing right now? Property manager, what are your rent growth? What expenses are you really seeing? Because maybe expenses are lower or they're higher. So this is kind of where you lean on your team. But an analysis tool like this makes it very easy, very quickly to spin the dials and see what the effect is on an analysis. So I just want to share that with you to kind of give you a glimpse. But again, a lot of things you do is using a 10-minute offer. And when someone, yikes, says submit an LOI, then you can start biting your nails and going, oh my gosh, what do I do now? Right? But you're wasting so much time and effort to try to get to that point. And you can build a lot of rapport with your broker by using the 10-minute offer. The other thing I want to show you is AI. Now, I am kind of I resisted AI a little bit. You know, I was like, well, it sounds kind of dumb and no one can do it as good as I can, which is maybe true, but I don't know. I don't think so. AI is, so my point is this, you got to pay attention to AI. And the quote that sticks with me was a quote that says, you know, people aren't going to lose their jobs to AI, but they will lose them to people who use it. So even in your day job, okay, you got to pay attention to AI. You got to start playing with it. So I'm going to force you to play with it right now. Okay, so in here, where is it? In my here, where's my doc? Madeline, where's the AI broker script? Where's that thing?
Looking at bonuses.
Oh, sorry, the AI prompt.
In the bonuses, back out.
Oh, bonuses. Yep. Okay, so thank you. Bonus. Okay. I got you. I'm a slow. Okay, here we go. So bonuses down here, you should
are
see
live.
bonuses.
Everyone. Yep.
They're now live. Okay, bonuses are in there. Okay, so cool. Well, we'll get that in a second. What I want you to do though is I want you to download the 10-minute offer AI prompt. It looks like So I'm going to bring up a Google Doc version of this because it's a little bit easier to copy and paste. So here's what we're going to do this together. So I want you to download this thing, all right, and I want you to copy the first prompt if you can. Will this copy, Madeline? Have you tried copying from the PDF?
I download it. You can copy straight and put that whole thing. I want to calculate. I've done this so many times.
All right, so this is cool. Here's the one. I want you to go to a ChatGPT prompt. Okay, just open the window.
Right there.
I have a link there. And here's my chat window. Okay, this is free. Okay, if you have not created a ChatGPT, put your email in there. They're going to send you a link to your email. You just click on the link, and then it's free. Okay, so you just start a new chat. Looks like this. Yeah, do that right now. I'll wait a second. So you can participate in this. All right. Then you're going to go to this PDF you just downloaded from the bonuses. And you'll get all the stuff later. So if for some reason you can't do it right now, you must do this though. It's freaking cool. It's amazing what you can have chat do. You should start using it for a lot of stuff. So I'm going to copy the first prompt. Okay, prompt number 1. And I'm going to copy that from the PDF directly into the chat window. I'm just going to Control V and hit enter. Okay. So it uses a bunch of gobbledygook. All right. It's probably longer than it needs to be, but Madeline spent a lot of time to make sure we get a consistent result. Yeah. So basically what it's doing, it's basically prompting you for the elements of the 10-minute, and it's going to go through everything and give you the answer. Now, should you know how it came up with the answer? Yeah, probably. Okay. But in a pinch, you can use this. You can copy this, paste and paste into your thing. So you got so it's asking for the gross potential income, total expense, and the asking price. Okay, so then I'm going to go in here, the prompt number 2, and I'm just going to copy this. Okay, this is what we just did for my 10-minute offer. You extracted it out of the PDF, and I'm just going to hit the little up arrow, and it's going to crunch, and it's going to give you. It wants like partial credit, so it shows you how he came up with the answers. It's ridiculous, right? It's like I don't really want to know all this stuff. Like, just give me the answer. But it's kind of showing its value, and it's kind of going through all these things that we kind of did in the formula and the spreadsheet, and it's doing a bunch of stuff. Okay. And at the end of the day, the 10-minute offer price is 2.83. Now we look at that at our thing, and it's 2.83, right? It just did what the spreadsheet does. Now I'm only showing this to you because you got to start leveraging AI or chat specifically. So this is ChatGPT is probably the most popular out there right now. It can do a lot of different things. It can, I mean, I would just say, pretend it's some kind of expert and start asking it questions. So I just want to leave this with you because it's a really, really important tool to use in life, in your job, and then certainly for multifamily. I mean, you can put prompts in there. And in fact, we have a whole bunch of prompts in the here in the bonuses. Under the bonuses here, the AI guide for real estate syndicators, and it's this one here. Has a different. It's called the AI powered guide to apartment riches, and it has different prompts for different things. Right, so it has prompts for deal analysis, due diligence, how to form a business entity, secure financing, like different things, raise capital. So download this thing and just look at it to see, and just copy and paste the prompts and see what you get. And then keep prompting it. Oh, I don't like that. Can you adjust this? Well, what about that? What does this mean? And this is how you start using AI to help you, to leverage AI in multifamily for sure, in your job for second, and in your personal life as well. It's pretty powerful. So I wanted to kind of show that to you and make sure that we're leveraging that as well. So summary is the following. Use a 10-minute offer to make more offers faster. You now have the spreadsheet, you have the AI prompt, you have the knowledge, you have the script, you have the LOI. Okay, you have all that stuff now. And then explore advanced analysis when needed. When you're ready for it, explore that and leverage AI whenever you can. Let's see. Now, I remember I said earlier in the show, I talked about the 4 pillars of dealmaker success, and we talked about the 4 pillars: deal ready, about building your team, deal analysis, deal flow, and then deal capital. And if you do those things, you will get a deal done in the next 6 to 18 months. Now, you might be wondering, Michael, well, why is there such a large span of 6 to 18 months? Like, it might as well be, and why is the span that big? And how can I do my first deal in more like 6 months and more and not 18 months, right? How is that even possible? So I'm going to ask you the question I asked you earlier in the training. Do you want to do your first deal in the next 6 months? Like, type yes if you do, because you may have gone, this for the birds already. I'm like, I'm out. But maybe you still do want to do your first deal in the next 6 months, and you don't want to take 24 months to do it, but you'd rather do it in 6 months. Like, I'm talking about raising capital and putting a deal together. Does that sound interesting to you? Maybe you have a bigger vision. Like, who here has invested in a single family house before? So type in, rental or flip or something like that. Like, who's done one of those? Because my question to you is, do you have a bigger vision? Like, people who get started in real estate like I did, because I flipped houses, we get into that because, first of all, we want an alternative income stream. And then we realize that once we do one, my gosh, it's an actual exit strategy. Like, if I do another one, if I do 10, 20 of these, I can actually exit my, whatever my W-2 is, my medical practice or something like that. But then, is your vision too small? Can you possibly build up a portfolio of 1,000 units that creates generational wealth and a legacy? Like, everybody thought about that, right? Because I didn't think about that until I was very far into multifamily. I was like, holy moly. Like, with houses, if you do one house or 2 houses or 3, I would need like 50 houses to generate $10,000 per month in passive income. And that's a lot of houses. You can generate that income with 2 or 3 deals, right? So do you have a bigger vision? And if not, do you want a bigger vision, right? Are you like ready? And that's a real question right now, because Otherwise, why get into apartment buildings if you're not ready to scale? So who's ready to scale? Type scale in the chat. Because I really want to talk to you right now if you're ready to scale. If you have a bigger vision for yourself, because apartment buildings are the only way to become financially free in literally as little as 12 months. It is incredible. And not only that, but it's not just your first deal. That first deal leads to financial freedom. And it's not even just that, because within 2 to 3 years, you can literally have a portfolio of 1,000 units, and you can make millions of dollars in a year and build up generational wealth. It is unbelievable. And so, in fact, we have been working with students now since 2014, and we've been doing this a long time, and we have a lot of best practice like the 10-minute offer, just as an example, but we've developed systems and making this more and more effective. And this is why when we studied our students who have done deals over the last 18 months, the average deal size is $4 million. And they have their first deal under contract in 6 months. Like, isn't that amazing? It seems to me like this deal is unusually large. Why is that deal so unusually large? And 6 months seems like an awful short time to do a syndication, especially when you've never bought an apartment before. That's an awfully long time. How is this even possible? So I want to share with you how this is possible, so you know if you actually want to go on this journey, you have some tips and tricks outside of deal analysis on what to pay attention to. And if I study the students who have done these kinds of deals, they leverage what I call the 3 freedom accelerators. There's 3 of them. The first one is, now let me back up. These students, what they do is they have some means to invest in property, to put a deposit down, maybe to invest in their education, to maybe go on a plane, okay? But they also value their time. They're like, I don't want to reinvent the wheel. So what they do is they insist on following the right system. They don't want to reinvent the wheel like I had to do in 2011. They're like, man, I don't want to tool around. I want to experiment. I want the right system. And in our case, it's called a Dealmaker Blueprint. The Dealmaker Blueprint literally tells you what to do in week 1, what to do in week 2, week 3, first 30 days, second 60 days, the first 90 days, what happens after 90 days. It's a very step-by-step system. That's because I'm a former software engineer. I'm very analytical. And a lot of people appreciate that about me. I'm not going to leave you guessing. It's a very systematic system to follow. And at the end of that system, you kind of know everything there is to know around syndicating deals, analyzing deals, picking your market, raising capital, securing funding, all that stuff. And then we kind of make you practice in a safe environment like I just made you do today. So you're going to talk to brokers in a market you're not going to buy, and you're going to talk to investors. And by the time you're done, it takes 90 days, you actually know you have the skills to do this, and you have confidence to speak with brokers and investors. And the second freedom accelerator that these students, these deal makers use is they get the right support. So they follow the right system, but they get the right support. And there's really 3 kinds of support that you need to check off. One is you need the right community. These are your community of peers, right? The crazy people. Because if you come home to your friends and family and tell them, hey, honey, hey, buddy, I'm going to get into apartment buildings. It's going to be a multi-million apartment building. And they're going to call you crazy, right? And the problem is, if you listen to this long enough, you might actually think you're crazy. And you're not crazy. If you get into a room with other crazy, you realize that you're not actually crazy. In fact, you can help each other. The second one is coaches. Coaches are these people who help you with mindset issues, right? They give you the tools to overcome limiting beliefs, false beliefs, hangups. You're in your mind a lot of the time. A lot of times we don't do something because we're up here. And coaches help you with the mindset. They're like shrinks, professional shrinks. And the third one are mentors. These mentors are people who have done what you already want to do. They've done multiple deals. They're financially free. They know what it's like to get into it. They know how to do deals. They can help you with live deal support. So these students that do these larger deals, they get the right support. The third thing they do is they join the right network. And you need the right network because you need access to capital, deals, and partners. So in this world, what happens, literally 100% of people, certainly in our environment, our ecosystem, they partner with each other. So for example, if you're a deal finder and you're underwriting deals, talking to brokers, okay, you're going to learn how to raise capital, but you may not be very good at it. You may not be that great at it. So, but there's your counterpart, and that's the capital raiser. The capital raiser counterpart, the capital raiser does not like numbers, okay? The sight of a spreadsheet will make them break out in a cold sweat. Okay, but what they do have is the gift of gab. They have relationships. They love playing golf and chit-chatting with people. That lights them up. Okay, so they have access to capital. These two together form the joint venture. Now, if you knew there's a guy or gal out there who can raise $1 million, that's how you can go after a $4 million deal. So when some people start working with us, we say right from day one, hey, don't look for a 12-unit deal like I did in 2011. You're going to look for a $2 to $6 million deal, around $4 million. You're going to look for that because they're more profitable, they're less risky, okay? And the capital is already out there. Like half the people in our environment are more capital raisers, and the other ones are more deal finders. And so you got to join the right network. Now, the other thing that I realized, relatively over the last several years is a lot of the times when we get into something that's more complicated, we start asking questions like, how do I do this? And maybe right now, because we'll do a live Q&A here in a bit, you might be saying, well, how do I do this? How do I analyze deals? How do I pick a market? How do I do this? How do I talk to investors? You're asking a lot of how questions. I would submit to you, I would like to challenge you to change the question. Not how do I do something, but who. It's this book by Dan Sullivan called Who, Not How. And it changes everything. Instead of you asking questions like, how do I do this? How do I raise capital? You should be asking, who? Who will bring capital to me? So rather than going in the weeds and going against your nature, and you're more of a deal finder, why don't you find out who can bring capital, right? It's like asking a question, well, how do I learn SEC law so I know I'm not breaking the law and I'm raising money legally? Well, no one does that. It's an extreme example. Why? Because you bring in an SEC attorney. Well, why don't you do that with everything? I mean, there are people who literally take this to heart and they're just building the team. When we get into the deal ready pillar and another challenge, talk about building a team. That's why they can do larger deals, because they put together a team, which doesn't take very long, and they leverage the team and they leverage their track record so they get credibility with brokers who are listing a $4 million deal. Does that make sense? So start asking who, not how. Who do I need to attract? What professionals, what partners, what advisors do I need to attract so I can do this thing? And I don't know how to do this thing. I don't know all the intricacies right now. Now you can learn them and you should know enough about it, but it doesn't mean you have to become an expert in it. If you're a capital raiser, for example, you don't need to be an expert underwriter, okay? But you do need to know how to underwrite deals, because you got to be able to call BS on your partner. You got to explain it to investors, so you have to know something about it, but you don't have to be an expert on it. So start asking who, not how. Now, in this mindset of, you told me you want to do a deal, and you now maybe thinking I can do a bigger deal by doing some of these things. Ask who can help me get started. Who can help me get into this? Who can help me actually do a $4 million deal that I can't believe I can do right now in as little as 6 months and get that on a contract? Who can do that? I don't know the answer to the how. Okay, I know some of it, and certainly you can learn a lot more, but who can do that? And I'd like to submit to you that our team would like to be that who for you. Okay, we have the #1 program on the planet to help you do your first deal in as little as 180 days. In fact, we guarantee in writing, if you decide to join us, we guide you to every step of the way until you do your first deal. We're gonna hold you by your hand and look over your shoulder and make sure you do the right way. And that's really what we do. And we'd love to have a conversation with you. So if that's you right now, you're like, man, I've been wanting to get started with this for a while. Didn't work out. I don't know, reason. Let's take those reasons off the table. Let's have that conversation right now. So go to themichaelblank.com/clarity, okay, and just book a call. 20-minute call with one of our advisors. And the reason we call it a clarity call, because you get a lot of clarity about what's important to you. How important is financial freedom to you really? And it may not be that important. It's, maybe not important now. It might be important in a few years from now. But if you don't really want to be in the same place that you are right now, in a year from now, like you want to do something different where you want to start scaling your real estate investing, and you feel like apartments may get you there, then let's have that conversation. It may or may not be right for you, but I can tell you right now that if you want to scale with real estate, you want to become financial free, the only way to do it is with apartments. I've tried, many other people have tried, sometimes for years, And then all of a sudden they switch to apartments, and within 1 year, they're financially free. It really is the only way to do it. So if you want to become financially free and you want to use real estate to do it, this is the only way to do it. The only question is now the right time? And maybe you don't even know that. This is why the clarity session is so important. So book that call right now. Go to the michaelblank.com/clarity. Just pick a time that works for you in the next few days. Don't let every day take over. You took really great amount of time out of your busy day to do it. Don't let it end here. Okay, don't take this training and some of this confidence and momentum and lose it. And let's make sure that we book a call. I did mention that the SDA is a 50% off, and it is 50. It's already very affordable. In fact, it's probably should raise the price. But for you on this call, you get 50% off. So go to the syndicateddealanalyzer.com, and at checkout, just use 50 off, 50 off, like Deepwood's off. Okay, 50 off. And we'll keep this on for a few days, but we won't keep it on for forever, maybe for the next, say, 48 hours. So go ahead and grab that analysis tool. It also comes with a training program. So if you liked my short one today, you're going to like the detailed one, and it's much easier than you think it might be. So write that down, 50 off. You can find Syndicated Deal Analyzer online, Bigger Pockets, wherever analyzers are sold, and then use 50 off at the channel. So we're going to do some questions right now, and I will find my chat box. But so I'm going to answer questions, but do not leave this call before booking this clarity call that out. So the michaelblank.com/clarity. Do that first. Okay, write down the thing. Just go there, pick a time, a date and a time. Do it tomorrow or the day after, or over the weekend, whatever time it works for you, and just hop on a call and let's just have a conversation. Right. So our advisors are not ninja, salespeople that are going to try to manipulate into buying something. It's not that kind of call. It's going to be basically up to you what you want to do. It's that kind of thing. They're going to say, what do you want to do? Nothing. Or I want to learn more. Whatever that is, let's explore that on the call and see if this is right for you right now. So it's michaelblank.com/clarity. All right, cool. So we got chat. Let's see.
Got some hand raises.
Yeah, let's do hand raises. Yeah, because this is going to be exhausting going through the chat. So let's do some hand raises and just go through some hand raises, and let's do some hand raises.
All right, we've got Sheena.
Yeah.
Yep. My quick question is the 55% for the expenses, is that based on a certain unit count? Or regardless of the units, it's still 55%?
So the numbers break down when you get into really small multis, like if you're doing a quad or something like that. They behave a little bit more like single family houses. But you can use it fairly reliable down to 10 units, something like that. It's a reasonably good rule of thumb. And again, you're going to call the broker and you say, look, I'm going to make an offer based on what you tell me. Basically, I'm going to make some adjustments, but just understand that when I get the actual financials and I get to the property, okay, and if it's different, substantially different, the numbers are going to change. Are you okay with that? Yes. Okay. Well, then we have an understanding. Then you can go through there and say, okay, here's my offer based on what you gave me. Okay. But once I actually see the financials, and things are going to be different, they may be different. So as long as you have an understanding with a broker around that, things will be fine. But again, that was a how question, and no problem with how questions. But the problem with the how question is there's going to be a how question afterwards. So figure out what do you need to do to make progress from that. Really think about it from a who perspective. And I'm not saying you need to start working with us, though I do think you should schedule a call, right? But even if you don't work with us, think more in terms of who, because you get to your result much faster if you think that way. And I never thought that way because I'm a do-it-yourself guy. Like, I'm smart, I can figure stuff out, and that's like my MO. But it's awful. I lost years and hundreds of thousands, millions of dollars tinkering and experimenting with stuff, and I don't even do that anymore. I'm like, I already know it's going to take me too long to figure this thing out. How can I bring someone on the team? How can I maybe give them some equity or do something and get them on the team so that I don't have to figure this stuff out? So it's really a mindset shift. Fallon, who else we got?
We do have a question from the chat that said, how do
Yeah.
you find the right network? There's you, there's Pace, Hunter, Phil Grove, etc. So how are you finding the right network?
Yeah, so the three freedom accelerators are universally true, right? So you could do the same thing with some other's ecosystem, and we may not be right for you at all, but the point is you still got to check those boxes, right? And so how do you join that? First of all, use it as a checkbox, as a checklist when you're quote interviewing other ecosystems. Does it satisfy those three things? Because we have found that the people who check those boxes off, those are the ones who are successful. Those are the ones who scale much quicker and make less mistakes. Deciding, so besides the checklist that I provided of accelerators, the other one is simply who do you resonate with, right? I mean, just follow them. Like a lot of the, they're on social media, they're on YouTube. You just watch them, follow them, listen to the podcast, read their book. Do you resonate with them, right? Some people with me, some people may resonate with Grant Cardone, right? And some people are repelled by Grant Cardone and they're more attracted to something like we do. Just find the person that you resonate with. And then once you resonate with that person that checks those boxes, just go deep with that ecosystem. Just go deep. That's a good question. That's a who question. I like that. Madeline, what else we got?
Let's see. We need some more to raise their hand. Don't be shy. Now's a good opportunity. There we go. Okay. All right, Michelle, there you go.
Michael, so I currently use your syndicator analyzer, and I have a question about it actually. For the CapEx, I don't know if this is a place to do it, but where you
sounds
have
very detailed. Sounds very detailed, Michelle, but go on.
For the repairs, when I went over your how-to videos, I couldn't figure out exactly like how to figure out how to do my CapEx per se. How do I do that?
Yeah, what I would do, so sometimes the CapEx are relatively straightforward and sometimes they're complicated. So the thing with, we've had multiple requests for the SDA, one of them to have a CapEx tab. Now I'm considering having a CapEx tab, but what I would do, Michelle, is create a CapEx tab.
Okay.
Just create a new tab, put all your CapEx in there, sum it up, and then where the CapEx is in the SDA, just modify that formula to get your final number. The reason I don't do a lot of these things, I've also had requests for waterfalls, is that there is a temptation to make things too complicated. And in trying to satisfy all scenarios, this being one of them, it's a good one. I agree. You can overcomplicate it, and it's just actually easier for you to modify the SDA to do kind of what you want, and to make it look like what you want, and you're free to do so. So that's what I would do. If it's a little more complicated, just do a separate tab and put it in there.
Can I have one more quick question too? Is oh man, I saw the rain. Oh man, I just totally skipped my brain.
You lost it. All right.
Yeah.
Well,
sorry.
So Michelle, so you're on your underwriting deals. Is that what you're doing right now?
Yeah, I'm currently underwriting deals, and I use your template to do them. And so going through this, the 10-minute offer was perfect for me because I try and do that, but then I was getting caught up for the marketing and the version on how to do the 10-minute, but now I understand is just focus on those two to get to the LOI. Don't do the rest of it.
Yeah, that's right. That's good. That's good. Well, if you need help, we're here for you. So we'd love to have a conversation with you about helping you get that deal done. Thank you for the question. We'll take maybe one more and then we'll let you go because we've been here for a couple hours and I appreciate y'all.
We've got one more, Lelaine.
All right, Lelaine, we'll end with you.
Yes, so final question for your program. When you have a mixture of students, right? Like you have some people that have a little bit of experience, some are completely brand new, but haven't, and then some people have some experience with just underwriting, learning. How do you usually create that team for your students? Do you like, hey, how does that typically work? How do you like just, hey, I think you can be a good fit for this team right here because they have some experience and you're trying to get your first deal as a GP?
Yeah.
How does
Have you done any real estate, Lelaine, at all? Any like single family, a flip or a rental or anything like that, or
Yes,
anything like that?
rental. So I do have experience with single family managing as well, midterm rentals, Airbnbs, that type of stuff.
Yeah. I will tell you, we don't really presuppose any kind of experience at all with the program. However, there are certain people who do better than others in the program. So I'll describe some of those, and that maybe you people that tend to be more successful is people who have done a single family house transaction like you have done, for example. And the reason is because they get it. They get real estate. They understand the power of real estate. If you've not done that, you've read in books and maybe know it abstractly, but you don't really understand once you have a rental or you've done a flip. So you get it. You also understand the problem of single family houses. You can't scale. Do you feel like you can't scale?
Yes, that is the reason why
So-
I'm in family. Yes.
And it's not a theoretical thing. I can tell you can't scale because I've tried and you've tried. But now when I'm talking to you about scaling, you're nodding your head going, yes, I understand the problem. So when I now propose a solution like apartments, you're like, yes, that makes sense to me. Now I can't quite believe I can do this, but I can see how it solves my problem. Now, if you can address my objections of how I can buy a $4 million building, then I might consider it, right? So you understand the problem. And the other thing is, the other thing is it is helpful to have some financial resources. From a practical matter, our program does cost some amount of money. Now, we do have programs for a variety of different financial situations. That is true. But it's also helpful to be able to put a deposit down or something simple like hopping on a plane, meeting with a broker and a property manager and looking at a property. Like just having some financial resources is helpful. It speeds things up. Now, you can raise that money from investors. You can. It's just not as natural to ask an investor to pay for your plane ticket. So I think people, and then the third thing I can think of is people who are coachable, people who understand, who are asking the question, who, not how, right? So if you're saying, hey, I'm going to do this myself, I don't need any help, well, then we can't help you because you don't need help. But so people who understand that speed and scale is important, and you want to leverage someone else's experience, like you talked about before, I think those three together, I would say, is probably our ideal profile. We can not only work with that person, but that person has success. In fact, I'd probably say we're very selective in how we actually interview you as much as you interview us, because we want a very high success rate. In fact, if you go to our website, themichaelblanc.com/wins, or wins, but you can see dozens and dozens of testimonials of people we've helped. So we want to make sure that you are one of those testimonials. Frankly, we want a success rate. And so our success rate is literally 100% for people who stick with it, which is why if you decide to work with us, we actually have a guarantee. We guarantee that you'll have a deal done in 6 to 12 months, depending on which program you choose. And we're the only ones that do that because we've done it so many times. And partially because of the system I talked about earlier. It's called a Dealmaker Blueprint. The system is so, and then the advisors and the experts put around you ensure that you're going to do a live deal. So if you do the work, you're going to do a deal. It's basically that simple.
Okay. Thank you.
So we're going to wrap things up here. I really appreciate your time. I would suggest if you have other questions like this about the program, is it right for me? Is the timing right? Just schedule a call. Again, these are not ninja salesmen. They're not even salespeople. They're going to ask you questions and then ask you what you want to do. And then they will propose some options for you to explore. And that's at themichaelblanc.com/. But anyway, I really enjoyed this new format, and it sounds like you did as well. It was really hands-on, and hopefully you got a few wins here. You saw that it's possible. It's not impossible to do. So if I can do a 10-minute offer, what else might be possible? And I propose to you that we'd love to help you on your journey. We're going to do this again in some of the other pillars around capital raising and building your team, and talking to brokers, generating deal flow. So watch your email list on social media, and we'll do this again sometime soon. so that you get more exposure to these other areas and start building confidence that, yes, you can do that. So again, thank you all for being here with me this evening, and we'll catch you next time.